Hello friends, in the series on the income tax cases, today we will discuss another very important case which is related to the demonetization period. In the demonetization period, wherever the assessee deposited the cash into the bank account, that was seen from the very colored glasses by the revenue. The additions were made with one or the other reason without giving the cogent reasons and without rejecting the books of accounts. All the additions have been made on the basis of preponderance of probability principle. The tribunals have taken a very firm stand in deleting those additions where the assessee was able to correlate the cash deposited into the bank account with the stock movement. In the present case also, a moot question before the tribunal was that where the assessee is not able to identify the customers to whom the cash sales were made and where the cash sales were especially not more than 2 lakh per cash sale, in that case whether the addition made under section 68 is justified. This issue has been taken up by Honorable Delhi ITAT in the case of Nitin Agarwal versus Income Tax Officer, and this case is reported in 123 ITR Tribunal, short notes page number 33, and the date of the judgment is 23rd October 2024. The present case relates to the assessment year 17-18. In the present case, the addition of rupees 19,50,000 was made by the assessing officer under section 68 on the sole basis that the assessee was not able to give the identity details and address of the customers to whom the sales have been made. And the second ground for making the addition was that the assessee has taken or assessee has shown a big amount of cash sales in the month of October 2016, while the corresponding sales were not there in October 2015 and 2017. So it is improbable that this year the sales have been made. This was the main basis for making the addition. But apart from that, during the assessment proceedings, the assessee has submitted numerous documents like the stock register, sale register, purchase register, movement of stock, audited balance sheet, and the assessee has categorically mentioned that all the sales have been made and has been incorporated into the sales. VAT returns were filed. Even the VAT department has not taken any negative stand against the assessee. So the addition made by the assessing officer was made without rejecting the books of accounts of the assessee and without pinpointing any of the deficiency in the books of accounts. When the assessee filed the appeal before the CIT appeal, the CIT appeal also upheld the order of the AO. So when the matter came before the tribunal said that in the present case, the addition is not justified for the various reasons. The first reason is that the books of accounts have not been rejected by the assessing officer. No discrepancy has been pinpointed by the assessing officer into the numerous documents submitted by the assessee during the assessment proceedings like stock register, purchase register, audited balance sheet, profit and loss account, and the stand of the assessing officer that there are abnormal sales and non-identification of customers are vague grounds to make the addition. The tribunal said that the assessee is able to prove the direct correlation between the stock and the cash deposited during the demonetization period. The tribunal said that in the present case, the assessing officer has accepted the sales, so he cannot make the same amount addition under section 68. The tribunal said that the cash sales would have increased because during the demonetization period, a lot of people were very much interested to use their demonetized currency by investing them into gold. So by accumulating all the facts and circumstances of the case, it can safely be assumed that the assessee was able to prove his point of depositing the cash of rupees 19,50,000 for which the addition was made by the learned assessing officer. Friends, this is a very landmark judgment and it throws a very adequate light that how the tribunals have taken the stand for the additions made by the assessing officers and in deleting them. At the end of this video, once again I am repeating the name of the case. The name of the case is Nitin Agarwal versus Income Tax Officer, and this case is reported in 123 ITR Tribunal, short notes 33, and the date of the judgment is 23rd October 2024. Thank you, friends.